Okay, 1st of November, looking at the stock markets, we'll begin with the DAX December future. We had this head and shoulders pattern, which was a sell signal once we broke the neckline. If you remember, on that day, the market dumped about 100 ticks below the neckline and then kindly revisited it so that we could jump into a short position. Now, I had us taking some profit around the 100 and 500 day moving averages around here, around sort of 12,100, 12,050. I actually didn't manage to get back in to a short position. I know some of you ran the short position, or some of you managed to get back into the short position. I was distracted, and this gap lower. Anyway, we hit the target. The target was 11,420, 11,370. We hit it bang on for profit taking for anyone who did manage to continue to run a short position. That is the measured target from the break of the neckline. And this is also good support because it's the Fibonacci levels that we see on this chart here. Now, there isn't really anything else there apart from the fib levels, but they're holding pretty nicely, and we are very oversold on the slow stochastic there at the bottom of the screen. Hang on. There's something that I wanted to show you. Right, there is a trend line going back to 2016. Now, we hit it pretty much bang on. The trend line was at 12,286, so actually we went a bit lower than that. Where did we get to? Oh no, 11,313. So it's just above the trend line, which is at 11,290. So that trend line is holding as well. When you consider how oversold we are, and we've already hit the measured target, not a huge surprise that this is holding. Now, a good bounce on Friday. Tested the trend line, and we closed unchanged. So the buyers clearly did decide to come in the second half of the day. I don't think we've got anything particularly bullish on the short-term charts. We do actually. I could actually argue that this is a potential inverse head and shoulders pattern. This could be a left shoulder, this could be the head, this could be the right shoulder. Not quite sure where to draw the trend line because I'm not sure if this is a completion of that shoulder pattern yet. I'm going to have to watch that more carefully. But we could just continue higher anyway on Friday. Quite a bullish. The doji on Thursday indicated that we may be bottoming, and then on Friday we got the what do you call that? Gravestone doji, hammer, whatever. Anyway, so oversold as you see on the daily chart, and a good chance of recovery. Now, if we are to break, say, 11,250 this week, a break below 11,250, I would suggest is a pretty important sell signal. We'll have broken the trend line on the weekly chart, and we could sink, well, quite significantly. I don't really see anything stopping us hitting the next fib levels. We've got this spike low down here at 10,850 area, and then we've got the 50% fib around 10,715. So this sort of 150 pip area here would be the next target. I really don't see anything in the way of that. So if you start seeing a break below 11,250 and you can jump on it, we could be looking at as much as 400 points profit on a short. But right now, as the charts stand, I favour recovery towards the 12,000, 12,100 area. Okay, Nasdaq is kind of interesting. I had us buying down to 11,000. I think with a stop below 10,950, was it? Now we got to 10,944 and we bounced into the close. I think this looks alright. I think this looks okay for bulls. We're oversold. The Nasdaq is in a bull trend. I'm going to take some of these trend lines off. Actually, I'm not sure if they're particularly relevant. And I just think that sooner or later the bulls are going to come back in. Now, obviously, we've got the election coming up, so this is going to be a really tricky week for markets. And I think we'll probably just mostly go sideways. I don't imagine there's too many big traders wanting to get into huge positions that are going to be tough to get out of on a volatile move. So I'm expecting mostly sideways, but at the moment this looks okay. We are back up at the 100-day moving average by the time we closed on Friday. This could be the pattern now developing, some sort of triangle or wedge pattern heading into the election. So maybe we trade sideways, but I think there's a good chance we go higher at the beginning of the week. We've got an oversold situation on the stochastic, and this market doesn't tend to stay oversold for too long before the buyers pile back in. Obviously, we'll need to get back above 11,150 for things to look a lot more positive. We've got the fib levels at around 11,080, the 100-day moving average at around 11,050. So if you want to try along there, stop below 950 and hope that we return to at least, I was lucky with this one. We were long on Friday, from the beginning of the European Open, and I just by luck decided to take 150 tick profit, and we just happened to turn around from there. Sometimes you just get lucky. There was a short-term moving average on the 4-hour chart, but really it was more luck than judgment. We've got quite a bullish candle on the 4-hour chart from the recovery in the last at the end of the session. This is, well, yeah, I think I can call this an engulfing candle. Can I? Yeah. This is a bullish engulfing candle on the 1-hour chart. We engulfed the last two candles, as you can see, and then we had some follow through into the close. So this looks quite positive into the close on Friday. If we can get follow through and get through 11,100, as I said, then we can push up to 11,250, 11,300, which will be our first resistance level on the short-term chart. So watch that breakthrough. Let's say 11,350 would certainly be a further positive signal, but we will struggle here, I think, around 11,250, 300. Even the S&P is a little more confusing, if I'm honest. Just checking the weekly chart. No, nothing on there. Okay, so on the daily chart, we broke below the 30, the fib levels here around 32.55, 32.50. Where did we get to? 32.25. Now, I don't know why we bottomed there, really. I suppose there's a chance that there's a trend line here, maybe. It's a weak argument, but not really. Okay, so we're holding below the 100-day moving average. This is not really an important trend line. I think I'm just going to take that off. It's not working. Yeah, I don't know what to say here, really. The 100-day moving average, I have to consider, will be a factor. It certainly was a factor in September. Held well, held perfectly again in June. It does work as a good support and resistance line, generally speaking. So I assume that holding below sort of 3300, 3310 would be negative. Above there would be positive, but it's not really giving me any clues, this one. I think, again, I favour a sideways direction, basically because we're oversold. I don't think we're going to go down too far to the downside. We didn't get a terrible reaction to this escalation in COVID cases last week. We had a sell-off on Wednesday, but no real follow-through on Thursday and Friday. So I don't think the market's taking that too seriously. Okay, we'll go on to the Dow Jones. Okay, Emini Dow. These candles are not too negative either after Wednesday's big sell-off. Yes, we did continue lower, and yes, we did test the red 200 and green 500-day moving averages, although we didn't go that far through them. The red 200 is at 26,146. We got down, okay, we overran it by nearly 200 points. But a good recovery into the close again showed that the buyers are willing to look for bargains or relative bargains when we've had a decent sell-off. We actually closed up on the day, according to this candle. So we closed above the important moving averages, which held so perfectly on Thursday. Retest on Friday just to shake out some weak shorts before a decent close on Friday in an oversold market. I have to say that I have to suggest that it's relatively positive. Looking at the short-term chart, okay, we've just the fib levels that I'll be looking for as targets: 26,600, 26,650, and then 27,000, 27,050 would be the targets. So a break below. Let me see now. Friday's low was 25,950. So we started getting below 25,900. This is going to look pretty negative. What was the low here at the end of July? 25,880. So that would break below there would be more negative as well. And then we could vacuum quite quickly. There really isn't anything to stop us going down to sort of 25,000, 24,900. That would be really the next target. Okay, we could stop off along the way at 25,300, which is the July low, but really I wouldn't be surprised to see us fall as far as here. So some good downside potential if you can jump into a short on a break lower. But for now, just like the Nasdaq, I think that there's a better chance of a recovery, just a small recovery into the election.